think there really is a new frontier that's been created here with the home improvement industry, and that not only have people been spending more time at home, and some of that will continue as none of us are going immediately back to their offices anytime soon. But the home has become the office, the school, the playground. It's really taken on a new role in households, and so for going forward, and now that we've seen people moving out into the suburbs, into more rural markets, and that's a longer term tailwind. So even though Home Depot and Lowe's are going to have this difficult comparison next year as they're up against 20 and 30% growth rates, we're still looking at an environment where we think that home improvement continues to take wallet share from other away from home categories, and from and just from the fact that people are moving, and we are that's a longer term tailwind. So the more people that we're seeing moving out and creating new households, they're now home improvement customers for life. So it has really opened up a larger market for them.
No, I believe that. I mean, it's been my own experience on year 3 now, and the projects are still coming.
Right.
Liz Dunn, would you agree with that? I mean, I think you're also pretty bullish on these stocks. Why do you think that Home Depot in particular is trading poorly today?
Yeah, so I moved to the Hudson Valley from Brooklyn after COVID, so this resonates with me. But I think that the investors are somewhat reacting to the added costs. So they've taken the wage increases and said, we now need to make permanent wage increases to compensate our associates. And so with the backdrop of people wondering how much of this is sustainable, what we do know is the cost is sustainable. The cost carries through and is long-term. Additionally, they made, this investment, brought back in this pro service business. And so if you're looking at Home Depot versus Lowe's, Lowe's has more of a do-it-yourself customer, and Home Depot has actually doubled down on more of their pro business and added costs in the form of wage increases.
Liz Dunn, is there anywhere in retail that you're more cautious about?
Yeah, I mean, I've been listening to some people say you want to play the companies that have suffered most in terms of the crisis. I think you want to be cautious there because some of these are poorly performing businesses. I think you can maybe be constructive about something like a Kohl's. They have a strong balance sheet. They've survived this. They're reinstituting their dividend, and you can see that they've made some strategic changes to their business that might position them well for the long term. I think you do not want to bottom fish and go after some of these really poor performing businesses, particularly in the apparel space. I think that's what you want to steer clear of.
Yeah, fair enough. And Liz Suzuki, I mean, maybe to this point about the strong getting stronger, we saw the special dividend from Costco. What does that tell you? Where are you on that stock? And, are your top picks similarly the names that we already think of as kind of the outperformers in retail?
Sure. Yeah. I mean, so I'm generally favoring the strong, well-capitalized retailers that are, have been doing well in this environment and are generating real cash that they can then use to deepen their competitive moat. If we think about what Home Depot is doing in terms of raising permanent wages, I mean, that's what we want to see a good company do when they're successful, right? We want to see them reinvesting in their employees and in capital expenditures, in investing in the business for future growth, and to retain that competitive edge. So I think that the large, well-capitalized retailers here are generally in a longer-term, better position. And just kind of going back into home improvement here, as we've seen COVID cases starting to rise again, remember that this is a category that's done very well and is they're considered essential retailers. So it gives you that exposure to the potential lockdown situation that we may be going back into, so they would benefit from that. And then longer term, they've got that benefit from the housing trends.
Shepard Smith here. Thanks for watching CNBC on YouTube.